Okay, welcome to the second in our series of 6 micro diagram videos, just going over some of the key diagrams that might be helpful to you when you're using some analysis. In this case, video 2 looks at market failure. I suppose externalities are right up there in terms of the economics you're going to be using. Externalities, of course, spillover effects from production or consumption for which no appropriate compensation is paid to one or more third parties. They are spillovers, they lie outside the market transaction, not reflected in the market price unless there is some form of government intervention. Now, it depends on the exam board you have. I'll take you through the 4 main externalities. Some exam boards only require you to know 2. Negative externalities from production, of course, the most common. Pollution from factories, the discharge of waste into rivers and so on and so forth, air pollution, noise pollution. The key thing here is to show the gap between social and private cost. And in my case, I normally draw the marginal social cost as diverging from private cost. The equilibrium by the free market is output, of course, Q1 is higher than the social optimum, where we would at least take the externalities into account. And it's important in your externalities diagrams for the top analysis marks to show the deadweight loss of welfare, in this instance shown by the area A, B, C. Negative externalities from consumption. Some boards use this approach where the consumption by person A imparts a negative disutility, lack of negative enjoyment if you like, to a third party. So the benefits to society are actually less than the benefits enjoyed and consumed by one person. A crucial point here is that it leads to overconsumption in the absence of intervention, and again a welfare loss. Really important to contextualize if you can. Is this, what product is this? Make sure that's clear on the axis, on the x-axis in particular, and again show the welfare loss. Positive externalities from consumption, positive spillover effects. Very important to understand these positive externalities, where the social benefit lies above the private benefit, as you can see here. And again, left to themselves, people may underconsume positive goods and services which yield positive externalities. And that underconsumption, Q1 is less than Q2, leads to another area of social welfare loss, because the private optimum, Q1, is lower than the social optimum. Always good in these areas to maybe label and shade. So I've shaded here. I think it's preferable to label the social welfare loss. And there are examples of positive externalities from production. This is where the marginal social cost of production is less than the marginal private cost. For example, a university may perhaps making their research available freely to businesses and things as a public good, which lowers the research costs of other businesses, effectively driving down the social cost of production. Positive production externalities, in theory, shift the supply curve to the right. The social cost lies below the private cost. Again, we tend to underconsume from society's point of view, leading to a deadweight loss of welfare. I think the key thing about externalities from an analysis point of view is to show the welfare loss, but then to evaluate the extent to which we can actually put a monetary value on many of these externality effects. Very important if you want to get the top marks, particularly if you've got an example where you feel there are both positive and negative externalities, is to draw a diagram showing both in action. I'll give you 2 examples here. In this particular case, there's a significant external cost. Can you see the marginal social cost lying way above the marginal private cost? There is also a positive external benefit, because marginal social benefit lies above private benefit. So the private optimum is A, where we just think about the marginal private benefit and marginal private cost. Overall, the social optimum is where social cost meets social benefit. That is at point B, or output Q2. So in this situation, there is a net social cost, and the social optimum output is lower than the market output, hinting at some intervention to reduce production and consumption. However, in this second example, I'm assuming there are some pretty significant and chunky external benefits from consumption, driving the social benefit higher, well above the private benefit, I'm assuming there's also some negative production externalities, but they're not significant. Can you see here that the private optimum is A again, but this time the social optimum is B to the right, because I've assumed here that the positive externalities dominate the negatives. Let's just go back a slide. This is where negatives dominate the positives. That's where positives dominate the negative. And you get what's something called net social benefit. Now that is a key term, particularly if you want to get very good analysis marks in your exams. Again, this kind of diagram leads to strong evaluation because you've smashed and nailed the analysis, as somebody would say. Information gaps, quite important, particularly if you've been studying merit goods and demerit goods, information failure. In this situation, I'm assuming that individuals are possibly overestimating the value to themselves of the product, or perhaps underestimating the cost. But their marginal private benefit with limited information, their demand curve effectively, I'm assuming, is higher than it would be if they had better information about the product, perhaps something which is being missold to them in terms of the benefits. So this is a classic market failure situation. If people had better full information on the benefits themselves, the marginal private benefit curve would shift to the left, leading to a smaller equilibrium quantity. Don't forget, with merit and demerit goods, it's both a combination of externalities and information failure, and you cannot avoid making a value judgment about what a merit good or a service actually is, and likewise with demerit goods. Hopefully that's been a useful, fairly quick journey through the externalities diagrams, and I'm sure you'll be using them to good effect in your exams.